Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk on this Tuesday, October 12th. We are on the road today. We are in central Iowa in Grundy Center, getting to check out a little bit of harvest and a little bit more, seeing some family on the road here this week. I'm your host, Jesse Allen. Thank you so much for joining us here today. MarketTalkAg.com, that is our home on the web. MarketTalkAg.com is where you can find us there. And I tell you what, we got those October WASDE numbers, crop production reports out. Seemed like it was mostly as expected how the trade reacted today, but we're going to get a good look at the numbers and talk about all of it. Let's waste no time. Let's bring in our good friend Jim McCormick with agmarket.net. Jim, good afternoon to you, sir, and glad to have you back on the show.
Good afternoon. Thanks for having me.
Well, let's dive right into these numbers, Jim. And, I think for the most part, everything kind of came out of these October WASDE and crop production reports as expected. I know a few numbers jumped out at you. What's your biggest takeaway from today's reports?
Well, I think the biggest takeaway probably on the bean market is I think the bean market right now, fundamentally, Jesse, is probably in trouble at this point in time. As the old axiom goes, big crops get bigger. This crop was a bigger adjustment. The guess pretty much came in right where our ag market team was thinking, and I think in general it's going to get bigger. Our producers we've talked to across the country are pleasantly surprised, plain and simple, about how these beans are coming out of the field, and this crop's going to get bigger. And we saw that revision, the carryout grew, but we're also a little bit fearful of the demand side of the equation. The government chose to leave the demand unchanged, and I know a lot of people are surprised by that, Jesse, simply because of the weakness we've seen recently due to Hurricane Ida. You could argue that the government needs to cut 100 million, maybe as much as 200 million off that demand number. Now, I think we got to keep an eye on it. If we do not see this export pace pick up over the next 30, 90 days, let's say go into the January WASDE, do not be surprised to see that demand get curtailed. But on the other hand, if Brazil stumbles a little bit, dryness issue starts to wreak a little bit of havoc due to La Nina, then that demand that we're fearful may be lost, may not be lost, and that'll help kind of tighten that balance, keep that balance sheet from getting too burdensome.
Well, I know today at the close, we broke below $12 on that November bean contract, and I know a lot of people were kind of targeting $12 as maybe the spot we would go down to. And what are your thoughts on where we go from here with the soybean market? You mentioned, watching exports and watching South America, but price-wise, do you think we got more room to the downside, or you think between yesterday and today we've priced in this downside move in beans?
I think we're going to get a temporary bounce. We've had 3 hard days down. It wouldn't surprise me to get a bounce kind of like a midway point of today's range. We did hear rumors of China pricing 6-8 cargoes of beans out of the P&W on this break. So I wouldn't be surprised to get some of a bounce on that. But I think near term, the market probably has opened up to test that low made on the March 31st WASDE number, I believe at 1184. That may be what it takes before we wash the final bull out of the marketplace.
Well, on the flip side here, corn today, they came in with that yield number a little higher than I think some folks were expecting, 176.5 bushels an acre. I know they made a few other changes, though, to the balance sheets. Talk about what you saw on the corn side out of the WASDE today.
Well, the corn number came in about 0.6 higher than what the ag market team was thinking. I think in general, we were in line with the number of Jesse was in line with what the trade was thinking. The crop in the East shrunk back. Illinois, Indiana's crop, they all kind of got lowered a little bit, while the crop in the West, where you're at, Iowa, increased. And I think that was anticipated. Now, the real question is, though, when you take a real deep dive into the numbers, they're still looking at a record corn yield in parts of Illinois, Indiana, Ohio, and Michigan are still looking at record yields. And I got to believe there's a shot that those numbers will tail off as we get into the latter part of harvest. We've got a lot of customers in the Eastern Corn Belt talking about down corn right now. Stalk quality is a huge issue. The disease issues we've heard people talking about has not gone away. So I would expect that those Eastern Corn Belt, it's a monster crop. It's going to shrink back. And then the real question is, as the crops improve in the West, is it going to be enough to offset it. It wouldn't shock me if that yield tipped back just a little bit. But in general, I think it's close to dial in. And then what we're really going to focus in on, Jesse, is demand, demand, demand. And that demand really is going to be China. The government has China importing 20 million metric tons of corn this year, Jesse, compared to 30 million last year. We think that may be too low. When you look at the China ending stock numbers, this crop was revised lower by the Chinese recently. Our belief is China's probably going to have to import more than 20 million to keep their food prices stable. So I think that's something we need to keep an eye on. If we're right, that'll help stabilize the corn ending stocks and drop it back from the 1.5 number it's currently at.
Well, and we look at that 1.5 number on the ending stocks, and we look at this market in general. Corn the last couple of weeks, we've really held this tight trading range. Haven't wanted to move much away from, say, 530, 540. We've really been kind of holding in there. A lot of folks been happy with corn. I'll ask the same question. Do you think today's move might have been our downside move, and then we push this corn market higher, or do you think we're going to settle into a little bit of a lower range and push back down towards $5, Jim?
Well, 518 is a 200-day moving average. I think that's the critical number I'm looking at. A close below 518 would open the door maybe to go to the low fives. I fully anticipate the low fives to be bought like crazy. Like I said, I anticipate the Chinese are going to buy. We haven't talked about wheat. The wheat numbers are definitely friendly. The U.S. wheat carryout dropped. The world wheat carryout dropped. When you look at what's going on in the world with the tightness supply of wheat right now, folks, the wheat market's goal right now is to price itself out of the feed ration. So I think the wheat will support the corn. I look for corn to hold. I think you could try to buy corn near this 200-day moving average, risk a little bit below it. If it takes it out, it could go down to low fives. But I believe the low fives are going to be very supportive. I mean, think about it, folks. And this, Jesse, we get a 15 billion bushel production. That's the current estimate. And we're only going to have 10% left. Stocks use at 10%. That's pretty amazing. There's not a lot of room for error. The ethanol number starts creeping back up. The demand number, we'll see what happens with South America. I know that a lot of people have talked about it. What's the headline news talk this week? Fertilizer prices, energy prices. Well, that's not just going on here in the United States. It's going around the rest of the world. And to get this world balance sheet number where they're at, the government's accounting that Brazil is going to bump their crop back up to a 118 production. Now, acreage-wise, they probably got enough acres to make that feasible. Yield-wise, that may be a problem. I mean, I got to believe they're going to have the exact same problem fertilizer as you are here of cost and actually getting it logistically to where you need it. So it's a situation that the world situation is still relatively tight. I'd lean to believe if you can get corn, if you're an end user, especially below $5.25, it's probably a pretty good opportunity to lock some of that use in.
Well, and for our producers here, they're hard in the fields right now. We know that might get a little bit of a break this week. As they look at the landscape now on corn or beans, we'll stay with those here before we go to wheat real quick. If they look at things and maybe they didn't lock in a floor, what are some things they should maybe consider doing here as they're maybe getting a little break with some rain this week out of the combine and maybe looking at their marketing plans here after this October report, which we've known has typically set the stage for the rest of the year?
Well, right now, I think if you're a producer and you haven't done a whole lot of marketing, we've got a lot of unpriced bushels, and you're very nervous about this market, consider buying like a $5 put, maybe in the December, even go out to March, buy a $5 put. And, if you want to cheapen it, consider selling a 550, 575 call and bracket yourself overall. Like I said, in general, I'm a little bit friendly corn down near $5. I think end users should do it. But the reality is world is a very scary place right now, and things change on a dime. So if you want to manage risk, consider it. I think if you're worried about something right now, I'm a little bit more worried about beans. Like I said, I do think this bean crop's going to get bigger. I'd encourage producers to continue to move beans out of the field if they need it. They want to re-own it. You can go out to July. There's not much carry in the market. I'll put some vertical call spreads in the July if you want to play the what if on the weather market in South America. Because the other thing we're worried about at beans in our group is recommended being at least 50% sold on the 22 beans is the bean acreage. We think this fertilizer price as well as logistics and just being able to get it is going to swing a lot of bean acres in. And, that could struggle the beans. If you throw a big bean crop with Brazil in, and we do not make any catch-up export sales, we are looking at a bean carryout that could balloon over 500 million. And the reality is, that does 500 million carryout, in my opinion, does not represent $12 beans.
In the wheat market, we were in the green today, Jim. Were you surprised at all by the numbers that we got? It seemed like everything pretty much fell in line with the pre-report expectations, and things were pretty friendly and bullish in that wheat market.
Yeah, the wheat number was no surprise. And what was kind of nice is the wheat number the world number tightened up on the wheat. That offset the increase in the world carryout number. So the feed grain and the whole kind of offset each other. I think the the wheat number definitely, Jesse, was kind of the positive story of today. And I think it's going to be the positive story for the winter. I mean, the reality is everyone's going to leave. Maybe wheat's going to be the leader at this point in time. The Russians, they are trying to price themselves out of the market with their tariffs. So they're trying to keep feed in. If you just turn on any news network, any news story, what is the world that everyone's talking about right now? Inflation, the cost of food. And I think the world suppliers are, have tightened up enough that the demand people are going to be scrambling. And you never know when they're going to panic buy. If you look at some of these commodities that we've seen, cotton, lumber, cocoa, different times you've seen these markets spike as investor money comes in, and food is something that everyone needs. And some people say you're 4 days away from chaos if you run out of food. So the wheat should be supportive. That should support corn, in our opinion.
Jim, any other final thoughts on that WASDE today? Anything else you want our producers to maybe remember who are listening in, or anything they need to think about?
Well, right now, I think, folks, more than anything else is, what it shows you right now is the volatility in these markets is not going away. It's going to continue to be there. Our group is highly recommending, get down to the basics. Try to get away from trying to pick the tops in the market and come up with a marketing plan that is profitable for your operation, not just in this marketing year, over the next couple of marketing years. You've got some fantastic opportunities here. I mean, and like I said, the numbers could get very, very bullish. On the other hand, good weather, a couple good weather cycles, and these phenomenal prices could run away from you. So don't be afraid to build a marketing plan. With the options and the pricing structures we have out there, there's a lot of ways out there, Jesse, to put a floor in, guarantee revenue, but also partake in the what if the market would rally.
Any thoughts on livestock today? We haven't touched on that yet, and I know that the grains kind of took the highlights of the day with the WASDE, but I know cattle were moderately lower. Hogs saw some more triple-digit losses today, kind of filling some of those chart gaps again, it looked like, in hogs. And any thoughts overall in livestock today, Jim?
Well, I think in general, I think the one thing I'm kind of optimistic about is on the beef side of the equation. China demand's been very talked about, very promising from the context we have. The government on their beef number, they left the exports unchanged for beef, which is kind of surprised me. But I think you got to be optimistic on the beef side of the equation. The hogs, like you said, they're filling that chart gap. But I think if the beef market continues to catch a bid here on the tightening supply and the demand increasing, that should support the hogs.
And outside market wise, I know you alluded to inflation a little bit. I know the dollar was a little bit of a bearish factor again today on the markets. On top of that, WASDE. Any thoughts out there with the financial side and anything you're watching there closely?
It's the dollars what I'm watching. I think when you look at the chart pattern, it is building a bull flag that will put some pressure on the market as the market starts to go, if that dollar does continue to break up to the upside. So we're kind of keeping an eye on that. On the macro front, energy prices have obviously gone through the roof. I think they're due for a little bit of a correction, but overall, the reality is the world economy has spun up a whole heck of a lot faster than a lot of people thought it would. Caught the energy market I think a little bit flat-footed. We've got a tight energy situation, not just the United States, but around the world. It will get cured. It's just going to take time. We're not even close to pumping the amount of oil that we were pumping pre-pandemic. So there is more oil, more nat gas to come on to come up on production, Jesse. It's just going to take time. But these $80 crude oil, it will bring supply to market, as always.
Yeah, well, we'll be watching that. Now, gas prices rising. You mentioned the fertilizer issues. We got a lot of other factors outside we're going to be watching closely the next weeks and months ahead for sure. Jim, I know if producers need advice, they need a little help with their marketing plans. They're navigating through these waters with these markets right now. You and the team there at agmarket.net have a lot of ways you can help them, don't you?
Yeah, so you can go to the webpage, agmarket.net, give any of our team members a call at 844-424-6758. The other thing, Jesse, I want to promote, we do have an app, the agmarket.net app. It is a great app. It gives you pricing for the producers. Also, more importantly, it helps you build a marketing plan and keep you in line of how to market and locks in those dollars per bushels and shows you what you're making on a daily, profit-wise day to day.
Well, Jim, we appreciate the time as always, sir. Make sure to check them out, agmarket.net. Check out that app as well that Jim mentioned. And we appreciate the time. Thanks for running through the WASDE numbers and more with us on this Tuesday, and we'll talk to you again soon.
Thank you again, Jesse. Safe travels.
Jim McCormick with agmarket.net, our guest today here on Market Talk. That's going to do it for today's show. Find us at markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.